And how we doing? Happy Tuesday. Happy Tuesday. Happy holidays. I hope everyone's doing amazing. Will this be recorded? I believe yes. Newport Beach. One of my favorites. I'm actually going to San Diego on Thursday. We got Massachusetts, a couple Taxachusetts over here. I like it. Wisconsin. Atlanta's awesome. Scottsdale, warmer than here. I'm in Salt Lake City, Utah. Little Rock, Arkansas. Welcome, everyone. Thank you for being here. I know this is the most exciting. I know all of you have been really looking forward to entity structure and tax savings. This has been the highlight of your week, right? You're like, I can't wait until Tuesday to find out how to save money on taxes. My mom's a real estate agent. My dad owned a real estate brokerage. My wife's a real estate agent. And I know all of you agents love keeping track of your books, tracking your expenses. I'm really, really excited about this. We did one of these not too long ago. And as I was talking to the team, I wanted to do one more before the end of the year, just to get everyone thinking and to make sure that you have your profit and loss in order. We've got about 30 minutes here today, so I'm going to take 10, 15, 20 minutes and just go over some entity formation, some tax saving strategies, and also open it up for additional Q&A for any of you that have questions as well. So thank you so much for being here. 4 degrees in New Hampshire. Oh, my word. It's cold here as well, but we're like 40. So that probably sounds like a summer vacation for you right now. My name's Tommy Thornburg. I am the president of a company called Prime Corporate Services. And a little bit of background, Prime Corporate, we have been in business since 2012. And when we first started Prime, our entire goal and intention was to help early staged entrepreneurs. I had a unique upbringing with both of my parents being self-employed and being in real estate. I always thought that real estate would be the path that I went. When I turned 18 years old, I went and knocked door to door selling pest control. And my mom was thrilled. 1099 income. Oh my gosh, my baby's self-employed. But when tax time rolled around, I got hit with the $10,000 tax bill, and that money was already gone. So after going to school, after bouncing around to different sales jobs, when we started Prime Corporate, I joke that we're like an In-N-Out menu because we've had the same services for the last 13 years. Entity formation, we've helped set up over 200,000 businesses, real estate agents, brokers, insurance agents, online businesses. We also build and develop business credit and corporate funding, which I'm really excited about. We've got some cool things that we have going on there I'm going to share with you. We have a full service tax and accounting firm for any of you that potentially need help with bookkeeping, tax services. And then we also do estate planning, trust, wills, living wills, power of attorneys. But this is not a sales pitch. This is more so to give you value, give you tax strategies, and hopefully find a couple areas of opportunity that you can implement directly into your life and directly into your business to save thousands, if not some of you, tens of thousands in taxes. So with that being said, let me share my screen here and we'll go through some slides just to kind of keep me on track. Plan, profit, and protect your business. I would say out of anything that I talk about today, I'm going to give you the 2 greatest takeaways, in my opinion, right here in the very beginning. So be thinking about this throughout my call here today with you. But the 2 major takeaways is, number 1, no one cares about your money more than you do, right? And I say that because I always joke, like whenever financial planners come to me and they're like, Tommy, let me manage your money. I'm only going to make money if you make money. It always makes me laugh because it's like, oh yeah, are you going to lose money if I lose money? I don't think so, right? So no one cares about your money more than you do. And what I mean by that, from what you can do to take action is January, February, March, quarter one. Dan, you know what? That's Uncle Sam seems to care about it slightly more than you do. That's a really good point. I've never heard that. I've been doing this a long time. I like that a lot. So January, February, March, quarter one, April, May, June, quarter two. Break your year up into months or quarters. We are already into December. So October, November, December being the fourth quarter of the year, how much money have you made self-employed? How much money have you invested in order to do so? Okay. I currently own 77 doors of real estate. And the reason that my wife initially got her license was so that we qualified for real estate professional status. Now, I share this with you because, to Dan's point, Uncle Sam, the IRS works in a lot of ways in a use it or lose it fashion. So if you know your profit and loss in the fourth quarter, it allows you to proactively invest into your future, whether it's purchasing a vehicle, marketing expenses, real estate investments to be able to take depreciation and create cash flow. But no one cares about your money more than you do. And now you get the power to make those decisions moving forward. Okay, the second most important piece that ties into the first is please track your expenses. Whether it is going to be with QuickBooks, I always kind of think about this like I'm talking to my mom. My mom, who was a real estate agent for 30 plus years, if I told her to download QuickBooks, it would be, okay, cool, through one ear, out the other. Not going to happen. So maybe it's designating one credit card that you put all of your business related expenses on. Maybe it's downloading a tax app. One of my favorite tax apps is called Keeper Tax. Will this be recorded? Yes, it is being recorded, I believe. Keeper Tax, I'm going to put it in the chat for you here, is one of my favorite tax apps. It's like $170 for the year. You could download it now. And what it allows is it allows you to upload all of your bank accounts, all of your credit cards, and it'll text you and say, Jessica, I noticed that you had 15 transactions today. Which one of these are business related? It'll text you. All of you are on your phone all the time. I know that about you. So you just reply and put 1, 3, 5, 7. Those are the business related expenses. And it tracks it and it organizes it for you directly in the app. So commit to something that you're actually going to do. QuickBooks is great. Keeper Tax is great. One designated credit card. But giving yourself something throughout the course of the year to understand your profit and your loss is very, very important. Okay. Before we jump into the good stuff, everyone's favorite part, my legal disclaimer. Fun, useless fact before we do that. Did you know that every legal disclaimer that was presented before you over the course of a year would actually take you a year to read it? Isn't that kind of scary? But two things. One, I am not a CPA or an attorney. I'm an investor. I'm an entrepreneur. I own multiple businesses, a ton of real estate. And two, all of your tax situations are different. Okay, some of you are married. Some of you have kids. Some of you have multiple businesses. Obviously, that is going to change your overall tax picture. Make sure you consult with a professional. I promise, if you're working with us already, I'm not the one that's filing your taxes. Lucky for you. So the four main areas that I want to talk about today. Number one, entity formation. There's some things that a lot of you could do before the end of the year that you could maximize on taxes, assuming that you're profitable. I want to talk about that so you can make those decisions before the end of the year, and it could result in thousands of dollars of savings for some of you. Number two, tax deductions, how they work, how you tie them back into your business. Number three, asset protection and generational wealth. It's not about where you are right now. It's where you're going to be in 1 year, 5 year, 10 year, and beyond, right? Number four, personal credit versus business credit. And this is an interesting one for a lot of agents and brokers because a lot of you are so based off of your personality and your brand, and you're just making money and you're putting it back. But it's very easy for this type of business to build and develop business credit because you're driving around a lot. You have your phone bills. You have different things that you can stage properties with. And if you can utilize a separate credit profile, all of my business lines of credit are much larger than my personal lines of credit. Why? Because it costs more money to run my business than it does my life. The interest rates are also much lower because of that as well. So I'm going to talk about these 4 areas. Feel free to drop questions into the chat, or I will leave some time towards the end for more questions as well. Okay. Well, let's start with entity formation. Every state is a little bit different, but on the federal level, there is no tax code that says you have to be the best agent in the world. There is tax code that says as long as you show the intent to generate income, you can take business-related deductions. So what that means is, why not show that intent? Okay, a lot of you are probably just operating under your name and your social security number. Can you do that? Yes, of course. A lot of you are doing that currently. But why not formalize it as a business? The reason that I love LLCs is they are simple, they are easy. A lot of you probably have LLCs, or a lot of you probably have PLLCs, depending on the state, since you have professional licenses. But this is the point that I really want to drive home late in the year. If you are operating under your name, or if you only have an LLC, there are ways that you can set it up from a taxation standpoint that could benefit your overall income. Those of you that have made $20,000 to $50,000 net or more, if the LLC was taxed as an S corp, or if you have an S corp, what that allows you to do is pay yourself a salary or a distribution, but it also allows you to avoid half of your self-employment tax, which is Medicare, Social Security. It ends up saving you about 7%. Okay, so if you made $100,000, I'm assuming that a lot of you would find a better place for $7,000 than, to Dan's point, Uncle Sam's pocket, right? Because Dan's correct. If not, they're going to take it with a smile on their face. So I am a firm believer that keeping more money in your corner and allowing yourself the ability to take depreciation, to utilize your dollars to benefit your financial future is a massive benefit. I've been called greedy for that comment before, but I'm going to stick with that belief for now. Once you have these business entities in place, this is where I recommend all of you have a separate business bank account, and I recommend that all of you are tracking your expenses. And the reason that I have that recommendation is to make it easier for you to make decisions on what happens with your dollars. Okay, 3 things that I think are very important. Any of you taking notes, write this down with your entity formation. Are you set up properly based off of these 3 questions? Number 1, how much privacy and protection do you want or need? As an agent, you don't care as much, I've found, about the privacy, because you are the brand. You're putting yourself out there. Your name's out there. But from a protection standpoint, if you go and you buy an investment property, you probably want that separate from your real estate business to keep the personal and the business and the real estate transactions separate. So privacy and protection, number 1. Number 2 are tax benefits, profit or loss. Okay, good or bad, profit or loss. How can you put yourself in a better position, whether you're generating income or spending dollars? Number 3 is credibility. Show yourself as a legitimate business. Of course, not only to your clientele, which a lot of you already do, all of you already do, but also to banks and lenders. Okay, banks are businesses, as all of you know. How frustrating is it when you have a W-2 employee that makes $100,000 a year and you can get them qualified to go show them property, in comparison to someone that's 1099, they make twice as much money, but because they don't have 2 years tax returns, everyone's sitting there twiddling their thumbs until they can get qualified. Okay, same thing for you. The more you can legitimize and show that income and show the profit and loss, the easier it is to A, qualify for different investments, and B, obtain larger lines of credit, which I'm going to talk about here shortly. How do you know when you spend a dollar if it is a business-related expense? Okay, the IRS loves 4 words: ordinary, necessary, helpful, and appropriate. So when you spend a dollar, if it is ordinary, necessary, helpful, or appropriate to generate income, track it as a business-related expense. Christmas gifts that you're sending out to your clients right now, phone bills, internet, power, portions of the rent or the mortgage for the business-related expense. There's a lot of different deductions that will directly, obviously, tie back to your business. And those of you that are like my mother, you can't go anywhere without looking for clients or talking about real estate. And I guess that's probably where I got it from a tax saving standpoint now at this point in my life. All right. One of the hard parts about being self-employed is insurance for a lot of people. So those of you that are paying for your own insurance, or if your significant other has insurance through their employer, if you have a high deductible insurance plan, look into setting up a health savings account or an HSA. You have to verify and make sure you qualify based off of your insurance. But if you can set up an HSA before the end of the year, if you're single, you can put up to $4,300 into this account. If you're married, you can put up to $8,550. So I'll just use myself as the example for sake of time. I will put $8,500 into my HSA this year. That is an $8,500 deductible expense against my business income. I can then invest those dollars and they can grow tax-free. And if I choose to take those dollars out for medical related expenses, such as copays, doctor's visits, medications, there is no tax penalty. Okay? Kind of a cool thing. What I did this year is I had my doctor write me a note that I needed a red light sauna. So I took $15,000 out, purchased a sauna, medical related expense, no tax penalty. But this is a great way to treat your money like a savings account as opposed to just buying a G-Wagon, a Range Rover, and an Escalade like YouTube University tells you to do over and over. Also great tax strategies, especially because bonus depreciation is back to 100%, which I'm going to talk about that again. I'm going off, but tax strategies are only as good as they're aligned with your goals. What are your short-term goals? What are your long-term goals? The tax code is over 70,000 pages. It's ridiculous. It's a bit of a joke. Okay, so the more that we can find the different tax codes that align with your short-term and your long-term goals, the easier it is to create wealth and financial freedom moving forward. Okay. Those of you that have kiddos, what can you do to put them to work? If I had $1 for every open house sign that I had to put up for my mother, I swear to you, I never got paid for them, but I wish my mom knew this growing up. I've got 2 little girls. I've got a 2-year-old and a 4-year-old. My 4-year-old's almost 5. Both of them work for the business as models. Some of you are like, what can your 2-year-old do? It's got to be reasonable. I've got to track it. I've got to organize it. I obviously can't have my 2-year-old doing my bookkeeping. That wouldn't work. But both my girls being models on my likeliness, on my websites, my business pays them. It could be social media management. It could be flyers. It could be helping with Christmas gifts. It could be open houses. It could be signs. What can they do to help you with the business? And if they're doing that, how can you have them as part of the payroll to make it a deduction for you? My girls didn't make enough money to file a return. This is aligned with my goals in teaching my girls financial literacy. If this is something that could benefit you as well, hopefully these are areas that we can help with or that you can look into for your situation. Okay. Another one that I just wanted to rapid fire talk to you about some different things to be aware of. By the way, if you don't have kids, throw it out. Let's talk about something else. But find a couple different things that I'm talking about here today that you're like, That will benefit my business this year or next. 5 kids. Oh my gosh. I've got 2. I feel like I should stop this whole call and have Jamie give me a lesson on how you're doing it. The Augusta Rule, very, very cool. Those of you that are golf fans, you know that the Masters golf tournament is in Augusta, Georgia every year. Back in the 1970s, this gentleman would rent out his house and leave because it's chaos. And one year he got audited for not claiming the income. So this got 5 daughters. I've got 2. My wife's like, should we have another? I'm like, you want 3 daughters? That's what we make over here, I guess. They're awesome though. I love them. This morning I got a video. I wish I had more time. I'd show you. This morning, my daughter told my mom when she was getting ready for school, my wife sent me a video. She said, Dad's the boss. You're in charge, Mom. It's a proud moment. We're definitely getting popsicles or ice cream later in my house. I can tell you that. But this Augusta Rule. So on the federal level, this is a federal thing, not a state thing. People ask me, can I only do this if I live in Georgia? No, it's nationwide. A lot of you have clients over to your house for get-togethers, for holiday parties, for things of that nature, right? So what if you were to rent out the Marriott conference room when you have these clients over? That would be a business-related expense. So what this Augusta Rule says, it's section 280A. By the way, this is one of my favorites, especially for real estate agents and brokers, because a lot of you are building really, really personal relationships. So how I utilize this is when I have business partners that come into town, I fill out a rental agreement. I feel like a nerd filling it out, but my business is renting out my house for agreed upon amount based off of a reasonable rate within the area. I transfer the money from the business account to the personal account, and I'm utilizing that as a business-related expense. If you rent your house out for less than 14 days a year, it is tax-free. So my business gets the deduction. My personal side doesn't have to claim it as income. Okay, this was about a $42,000 write-off for me last year. Can I pay my grandkids and write it off? There are ways to do that. Most of the time, it's most beneficial if they are dependents. But I can tell you right now, if I had grandkids right now, I would absolutely have them on payroll. And even if I have to pay the taxes, I would still set them up and find jobs and roles and responsibilities for financial freedom, to teach them responsibility and to budget. There are ways that you can do that, Rebecca. Great question. A lot of times it is more beneficial if they are direct dependents, because that way you don't have the tax liability on the payout as well. The point that I drove home in the beginning, we filed over 50,000 tax forms last year. And what we found is I collected a bunch of different data points. I've got over 150 accountants now. And what we found is the main reason that some clients save more money than others in taxes is when they committed to tracking their expenses, they saved an average of $9,200 more than they did the previous year. So please track your expenses if there is one takeaway that you have from this call here today. Asset protection is important. It's a sue happy world that we're living in. Personal is personal, business is business. Separate those two. If you're getting into business with other people, if you're buying an investment property with someone, if you're doing deals with someone, treat contracts like a way to hold each other accountable. Putting something in writing, I always joke, like the beginning of a business relationship is like the honeymoon phase. And most of the time, it doesn't get better. Not always, but most of the time. There's either too much money or not enough money. There's never the perfect amount of money, right? So put a contract together that says that Jessica and I are going into business together. She's 60% owner. I'm 40. She's doing the sales. I'm doing the marketing. Create proper expectations, not only for the roles and responsibilities, but also the payment schedules. And a lot of times we found that that creates a much stronger business relationship moving forward. A lot of questions about the grandkids. The grandkids can be on payroll, but a lot of times the tax deductibility is not as great as if they are direct dependents. Now, if your grandkids are dependents, then that falls under the same categories, okay? All right, last couple things that I want to talk on, and then I'm going to see if there's any other questions for me here. 30 minutes goes by like that, and I can't stop rambling, so here we are. All of you have a legal name, a social security number, and a personal FICO credit score that ranges from 300 to 850. You can do the same thing for your business. Okay, whether you're pre-revenue, you're already generating income, you are a self-employed entrepreneur. So let's make sure you have the business entity, whether it's an LLC, a PLLC, or an S corporation, maybe even a C corporation, depending on your situation. But you have the business name, you have the EIN. You can also build and develop a Paydex profile, which is a separate credit profile for your business. It ranges from 1 to 100, and 80 to 85 would be like you having a 750 to an 800. Okay. We have a 7-step process that we walk clients through on how to build and develop these credit profiles by getting a gas card, utilizing store credit cards. But if you can build up these business lines of credit, let the business pay for itself, and then pay yourself from there, naturally, it can put you in a much better position. Okay. Tito, what's the dollar amount that is too low regarding income in that it's not worthwhile for us to do an LLC taxed as an S Corp regarding cost versus benefit? Great question. It really varies based off of your business expenses. So what we have found is usually you've got your gross income and then your net income. So after expenses. So your net income after expenses, usually if it's $20,000 to $50,000 or more, there's oftentimes savings in avoiding half of that self-employment tax. So how much money did your business make? What were your business expenses? And how much are you paying yourself out personally? If you're paying yourself out personally 20 to 50 grand or more, oftentimes that 7% is worthwhile on a cost benefit basis. That's a very, very good question. Check with your accountant, make sure that that is what's comfortable. But 20 to 50 grand is where we usually see a couple $1,000s of savings for our clients that we utilize that for. Okay. Great question. Last thing that I'm going to talk on here, and then we'll answer a couple questions and call it a day, get you back to your lives. Your structure is a living, breathing organism. And I share this with you because a lot of people don't think about this. Okay. Up top, all of you should have an estate plan. Trust, will, living will, power of attorney. If you don't have one right now, it doesn't mean you need one tomorrow, but get the trust, get the will. All of you know that there's a full real estate world out there that's prying off of probate leads and everything else. And I'm not saying there's anything wrong with it, but protect your assets and have those things in place. Okay. If everything that you're doing is based off of your real estate transactions, you don't need all this. Maybe it's one LLC. You're generating active income, which is taxed at the highest rate, 10 to 37%. So if you have the LLC or the S Corp, you're utilizing the QBI, the qualified business income deduction, which with the one big beautiful bill, they're saying that that's going to be permanent moving forward. The QBI, what it is qualified business income. So if you make $100,000, the first 20% is qualified business income that is tax-free. Massive value and massive benefit, by the way, for those of you as agents. Also, just from a real estate standpoint, I told my wife, like, I've got all sorts of friends and family members that if you're looking for investment properties, or if you have clients that are looking for investment properties, oh, the rates are too high, the costs are too high. They're always too high. Everything's always too high. It's always expensive, right? I sound like my mom now. Rates, when I first started selling real estate, rates were 20%. What do you mean? Well, houses were $30, but that's another story, Mom. Anyway, I digress. I mean it when I say it. Cost segregation and bonus depreciation being back to 100% is a massive game changer. The only reason I own as much real estate as I do is because I can run these cost segregations to accelerate the depreciation, to take the tax benefit now and create cash flow moving forward. So a lot of you probably work with investors, and if you're doing this and if you understand your tax situation, I have found it as a tool in your belt to be able to say, oh, do you have an HSA? I've got an HSA. Do you pay your kids? I pay my kids. You see the Escalade? I wrote off the Escalade. It's for the business. I purchased a real estate investment property so that I could depreciate it and I can lower that tax liability, right? Out of the 77 doors that I own, I purchased 62 of them in November and December. And the reason for it is because when you know your profit and your loss, now you can make educated decisions on your financial dollars, on what you do with them moving forward. Okay. So what I'm going to do here, I see a couple final questions here that I want to make sure I get answered for you. We'll put a link on the screen right here real quick. And any of you can go to this screen. I'll also drop it in the chat for you just so that you can see it. Oh, team, you're the best. primepartner.info/EXP. If any of you click on that link and would like to schedule a free one-on-one consultation with one of our team members, I've got a team of 80 advisors. We can walk you through on a one-on-one call. We've got slides. It's a Zoom call. Where are you now? What are your goals? What do you need help with? The goal here is to bring all of you value, not only in this call, but on that one-on-one call. And if we can earn your business, great. But I'm talking to a bunch of salespeople here. I don't need to sell you. The elephant in the room is our goal is to earn your business through entity formation, business credit, tax savings, estate planning. And if nothing else, I'm confident that we can give you some takeaways based off your situation that can hopefully give you asset protection or additional tax savings. That's the whole goal here. So hopefully this helps. Let me know if you have questions in here, a couple of them that I see. If I just started as a real estate agent a month ago, should I wait to open the LLC? Really, really good question. My biased opinion says no. At the end of the day, you've got to work at at a rate that you're comfortable with. So what's hard about questions like this is if you ask the attorney, they're like, it depends, but yeah, protect your assets. If you ask the accountant, they're like, no, just wait till you make money. It's easier to file the return. The truth is oftentimes somewhere in the middle. The reason that I recommend setting up an LLC as soon as you have the intent of generating income, which you obviously do, you've invested time, energy, effort, and money. Why not set up that LLC, write off your startup expenses, write off your organizational expenses, give yourself a tax return and utilize and write off the deductions, because even though you haven't done a deal yet, you've still invested dollars with the intention of generating income. So my entrepreneurial biased opinion says set it up, take the deductions that you can on the investments that you've already made, and then focus on generating more of that income moving forward. Okay, great question. Dan, the Uncle Sam man. I just got my license this fall. Congratulations. Just starting out, currently a 1099, no income yet. Can I still take a loss on deductions for the first couple of years? Yes. A lot of people, this is a very controversial statement. So a lot of people say that if you don't generate income 2 or 3 out of your first 5 years, then you can't take those deductions. There's no real tax code that says that. Everyone has a strip mall by their house, and there's a restaurant in there that's constantly changing names. For me, I've got a Mexican restaurant that's right next to my house. Every 3-4 years, it changes the sign. I'm like, nice, new restaurant. I'm going to go check it out. I walk in, it's Miguel, my guy. Same thing. So you can't do the same thing and expect different results. It's like the definition of insanity, right? But if you're just getting started, it takes money to make money. So there's startup expenses and organizational expenses that we take for a lot of our clients to maximize on these returns. Okay. Is the training being recorded? Yes, it will be shared. It is in Teen, will you put where it is again? I can't remember. I saw you put it in there. I think it's on YouTube, and then it'll also be wherever Teen says it is in the chat here. Oh, on YouTube there. Perfect. Let's see here. Do I need an LLC to take those deductions, or can I take it without an LLC? You can take it without an LLC, but why not show the intention of the business? Because remember, you as an agent hate running across these clients that are making 150 grand, 200 grand self-employed, but need 2 years of taxes. Why not give yourself the benefit of the doubt of knowing you're going to do this long-term and utilizing those deductions? Separate the personal from the business, take them as business-related expenses. The reason I love starting as an LLC and why I'm so favorable towards LLCs is because you can write off the profit and the loss. They are separate tax forms, but they flow through to one return. So if you had W-2 income all year and now you have this 1099 component, even if you haven't generated income, you can write off these startup expenses to flow through to write off against those personal expenses. So a lot of it's going to depend on your accountant. There are ways that you can take those deductions without an LLC, but once again, very biased opinion, so brace yourself. Why not show the intent of it being a business, utilizing the deductions there and flowing those through against your personal income? Cool. All right, everyone. This has been great. I went over my time like I always do, but I hope all of you had some really awesome takeaways. I just put the chat. Oh, I think I'm missing a question here, actually. I'm sorry. What is the scope of work that Prime does? Business analysis, entity analysis, monthly, quarterly reports and P&L, guidance on rental investments, cost seg, tax prep, etc. Which parts? Really good question. So everything entity formation, LLCs, S Corps, C Corps, everything business credit development wise on money now, money later, how you can build a credit profile. We do have not only tax filing, tax prep, tax advisory, but tax strategy. We've got a really amazing tax strategy service actually that you can upload your previous year's tax return. AI pulls out every box of your return and gives you 5 to 20 different strategies that you are not implementing that you could be. And we've seen that it saves anywhere from 10 to, we just saw $250,000 savings from that alone. So, and then also estate planning, trust, wills, living wills. We don't do cost segs in-house, but we have a ton of referral partners that we have that we've partnered with or refer that out to based off of the value of the property or whatever else that you need. If we don't do what you're looking for, we very likely have the connections to put you in touch with people that are already vetted out. So we do a lot of work. Like I said, we've set up 200,000 businesses. We file 50,000 tax forms a year, thousands of estate plans a year. So usually we can help and find those areas for you. Dawn, I've been using Prime for years. You're the best. Checks in the mail. I appreciate the endorsement. Dawn, anything that you need, anytime, reach out to us. We're here for you. We started this company with 4 of us, and we currently have close to 450 employees. It has been built off of care. It has been built off of helping the entrepreneur. Our tax company's slogan that is trademark is #IRS sucks. I really didn't like it in the beginning because I thought it was negative, and I'm rather optimistic, but people either love it or hate it. So that's who we are. We want to keep as much money in your corner as humanly possible, but do it the right way and do it above board. I'm starting an LLC. I love it. Just became an agent. Congratulations. Write off the cost of what it took you to do that. Your phone, your internet, your power. This is a business call. I would be writing off portions of the internet and things of that nature as well. It is ordinary, necessary, helpful, and appropriate for you to go generate income. So I love that. How about if you have a full-time job at the same time? Can you still do an LLC? Absolutely. A W-2 in a lot of ways is a superpower because you can qualify. You can, as a real estate professional, my wife is a real estate professional. So the reason that we buy real estate is I'm not capped to writing off $25,000 for real estate. So my wife takes a huge loss on the real estate investments that flows through against my income. and it becomes better for us as a household. So everyone's situation is so different, but find the tax codes that align with your goals. I think that's a massive benefit that way. Became an agent a month or so ago. Nice. Congrats. Do you still do revisions for previous years? We can if it makes sense. If financially it's not going to benefit you, I always like mistakes or the lack of knowledge. So previous years, not taking advantage of things like this, it's cost you either time or money. How much time and how much money has it cost you, or will it cost you? And is it worth it, or should we just move forward? Once we do that analysis, we can absolutely help. And if you haven't filed previous years, you're not alone. We help a lot of people with that. So Rebecca, hashtag IRS sucks. Love it. Okay, cool. We've actually had people that have canceled because they're like, I don't like that. It's a government function. And well, all right. We're not for everyone. That's okay too. So working full time, becoming an agent in March, also collecting SSA. It's up to you. I mean, you still have the intention to generate income, but in that scenario, if you wanted to wait until you passed and got your license, I would understand that as well. I think it's still worth scheduling a free call. We put the link in there a couple times for you so you can talk through it more on how much money, how much time is it actually going to cost you, and is it beneficial as an investment back into your business? Okay, what we expect, if you're paying us for tax services, we should be saving you much more than you're paying us. Okay, you can file your taxes for free, but why not pay $1,000 and save 10 grand more? If that's not happening, you have someone just entering numbers, not helping you on tax strategy. We've got videos that $100,000+ of tax savings in just YouTube videos that we give away to all of our clients. We've got some really cool things that we offer from the tax side as well. So, all right, I am 15 minutes past my time. I appreciate all of you. I didn't expect there to be this many questions, but you guys are great as always. Thank you so much. Schedule that call if you haven't already. And I don't know, leave a comment or send a message to the EXP team if it was helpful and if we want to do more of these throughout next year. But happy 2025, happy holidays, Merry Christmas. I hope you guys all have a very, very prosperous 2026. And if there's anything that we can do to help you with entities and tax, please don't hesitate to reach out. All right, everyone. Thank you so much. Have a great day. We'll talk to you soon.